Yo, what's good YouTube? It's your boy Kyle Chartbully, back with another video. Hope everybody's doing well, taking care of themselves, staying safe, staying healthy. In this video, I'm gonna show you guys how to go from the higher time frame to the lower time frame so that you can hone in on your entries and get a better risk reward ratio. There's quite a few videos out there on sniper entries, but I'm gonna give you my take, and if you like it, leave a like. If you don't, leave a dislike. Also, if you're new to the channel, if you don't mind, hit the subscribe button. It takes 2 seconds, helps me out, and I greatly appreciate all my subscribers. So yeah, man, let's get it going. So right here we're on EU. So I'm gonna give you a couple of things first before going in on your lower time frame entries. First things first, this isn't gonna work on every instrument. So what I mean is, you can have a 2 to 3 pip stop loss with like the majors like EU, AU, UJ. You can have a really tight stop with those, but this is not going to work too much like on your gold US 30s. Those typically are going to be higher pip stops, so you just got to be open to that, you know what I'm saying? So I think this best works with major pairs, and not so much for like the metals and the indices and things like that. So I would say try these out on the EUs, the UJs, the UChefs, things like that. And then if you want to try with gold and everything like that, you can, but just know that a typical stop, even go on the M1, the M5 is going to be like 20-25 pips, so just be open to that. All right, so we're on EU now, so let's just pick random things and let's just see what happens. All right, so first thing first, you have to know where you're at on the higher time frame. So on your daily and your H4, you have to know where you're at all times before you can drop down to the lower time frame. So let's say, for instance, right here we have just this past week. Let's say I think it's going to go all the way to this mark right here, right? That's my next level I'm looking for it to hit. So what you do is, while you're going down, like I said, if you have a bullish mindset or you have a bullish sentiment, you need to drop down. And then we're looking at H1, so we're saying, all right, for it to go all the way up, we want to get in at a discounted area. Now, what do I mean by discounted area? If you haven't watched the Fibonacci video, but basically you want to get in at this level right here. So we got the buy zone, low risk buy zone, sometimes equilibrium, but basically we want to get down here before we look for a move up. Buying when the price is high is not going to do well. You're going to be in major drawdown, and we're trying to do sniper entries anyway, so we're looking for the best risk reward. So let's just say right here we see this move right here, boom, this is dropping, and we're like, okay, and we see a move here, this move right here. Oh, let me get rid of this, and I'm trying to keep this simple for you guys, just so you can do this right now. So let's say this move right here. All right, so we see this, we're on the M15, and we see that move, right? Click right over here. So this is what it looks like on the M15, right? Not bad, right? But you might say to yourself, how do I know? I'm looking for confirmations, right? You're looking for, what you want to look for is breaks of structure on the lower time frames. So like I said, you have to know where you're at on the higher time frames first, because this ain't gonna work if you don't know where you're at on the higher time frames. So what you do is you drop down M5, right? So this is clearly right here, this has been trending downwards, right, for the day. As soon as this breaks this level, right, because that negates the lower highs that's been happening, this will now be a higher low up here, right here, right? So when that breaks, we have a break in structure and a market structure shift. So no longer are we looking for lower highs and we're going down. So what you can do is look for a retracement, right? And on the M5 we have what, a W right here, right? A double bottom, whatever you want to call, with a stop hunt. So what you want to do is bank that this move right here and this market structure shift is not going to go below this low. That's 8 pips, right? Now if we go down to an M1, Get over here real quick. See if I can find where I was at. Let me zoom out. All right, bet. This same move, right? It's all the way right here. This is the move right here that broke. We came down and we retraced, right? This is also another level right here. This is at the low. So like I'm saying, you have to look for your market structure. So as we're going down, we're keeping in mind the higher time frames, the levels, and what we're looking for. So when this structure here breaks, and let's say you start getting another lower high or high low right here, boom, you can take your entry right here and set it below the low. That's a 5 pip stop, right? Now what you don't want to do is this is up to you. So if you're going by percentages or pip count, I mean, it's up to you how much you want to risk. But what you're trying to do is you're trying to increase the upside but still keep your downside the same, or if you're going to risk a little more, you can. But what you're doing is, and you're targeting your whatever your next target is. So maybe it's up here, so that's 20 pips, 5 pip stop. Obviously that's a 4-to-1 ratio, not bad, right? And this can get higher and higher and higher. It depends how much upside you're looking at on the higher time frames, right? So like I said, this is going to work best on the EUs and the U chefs and the majors and things like that. So it's the same thing, and sometimes you feel more comfortable taking the entries on M5 than M1, but once you know what you're looking for, you can drop all the way down, and you're looking for market structure shifts, and you're looking for breaks of structure on the lower time frames that coincides with your higher time frame analysis, if that makes sense. So let's do a few more. Well, we'll stick with EU because I think this works best with EU, honestly. And I'm just freestyling this, so I apologize. I don't have anything like planned for real. All right, the 13th right here. Why not? This is a good move. The 12th. Yeah, let's do this. Same thing, right? Maybe let's say this is our target because we're still in an uptrend, right? This has been going up for a while, and we're banking on this high getting broken at some point. So we have our Fibonacci, and same thing. We're looking for moves within the buy zone, low risk buy zone, and range low. Okay. And let's drop down. Same thing. We're looking at M15. This is April 12th. Boom. All right. So we get a nice move. Drops right below Asia consolidation. This is London session, and moves up, right? So if you're looking for this move, right, what are you looking for? Once again, low risk buy zone area. This right here is what you're looking for. Okay. So like I said, we know where we're at on the higher time frames, and we're saying, yo, it's gonna break this high up here, or maybe that's our target, whatever. So drop down to the M5, right? Once again, another stop hunt and another double bottom, right? Now what I say we're looking for breaks of structure, and we're looking for moves within our ranges. You know what I'm saying? So we got this. So maybe you're not comfortable taking this yet because this honestly hasn't broken this level, right? Because that's the level, if you had your stop loss and you're taking a sell, that's where you want to put it above. So maybe you're not comfortable taking it all the way down here. Okay, but let's drop to the M1 and see what happens. All right, let's see if I can find it. All right, here we go. Boom. Like I said, so M5 we had a level all the way up here, right? But the M1, you can see that this level is actually right here. So that would constitute as a break of structure and a shift in the market structure. You know what I'm saying? So once he does that, and let's say it breaks here, you know what I'm saying? And we see that we're now getting, you know, higher highs and all that. We can take an entry, set it below here, or you can set it below this, you know, whatever you want to do. But either way, that is how you hone down right there. So if you do that, let's say you put it below here, that's a 5 pip stop. If you want to get real tight with it, you can put it below here for a 3. But I would probably just put it below here for a 5, and then your target up here maybe, you know, 28 pips or something like that. So basically what I'm saying is you have to know where you're at first. No, I would check the daily, I would check the weekly, and just know where your range is at on a higher time frame. So if you're looking for certain levels, if you're looking for certain key points to get hit, do that. Hone down on the H1. Like I said, you can make your Fibonacci there. If you don't know how to do the ranges, take a look back in my past Fibonacci video, and I will show you the settings I use for the Fibonacci. And just keep honing down, looking for breaks of structure, shifts in the market structure, you know what I'm saying? So that's going to be it. Practice what I said here. I don't want to drop too many examples and get too long, because I don't have the attention span when I'm watching YouTube videos and they're doing 35-minute introductories. You know, I like it short, concise, and something I can apply right now. So yeah, look for your breaks and structures, keep your high time frames in mind, and let me know if you like the video. Let me know if you want to see more of these. I can do a part 2, part 3 on different pairs. But yeah, that's going to be it for now. Hope you guys stay safe. Have a good weekend. It's your boy Kyle Chartbully. I'm out.